Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today and really a reintroduction to Liberty Gold, traded on the TSX under the ticker LGD and on the OTCQX under the ticker LGDTF. And we're joined today with the president and COO, Jon Gilligan. And Jon, great to get you on the show for really a reintroduction to the story behind Liberty Gold. We did bring the company on, I guess, about a year and a half ago, but so much has changed and there's been so many updates that I really want to start off just by reminding people of the company mission, gold in the Great Basin. You have two projects. The Black Pine project is the flagship in Idaho, but you also have the Goldstrike project in Utah. A lot of the work and a lot of the focus we'll be talking on today is at Black Pine. But just remind us how the company came together, these projects, and really what the vision is, big picture, for Liberty Gold.
Thank you very much, Shad, and we really appreciate the opportunity to be present today to tell you a bit about Liberty. Yeah, Liberty Gold is an explorer developer focusing on oxide gold in the Great Basin. The company, in fact, is like the third reincarnation of a group of very talented exploration geologists that have had a huge success discovering these types of deposits over the years. The most notable being the Long Canyon deposit that was sold to Newmont a number of years ago. Our focus is, as you mentioned, on the Black Pine deposit, which is in southern Idaho, and the Goldstrike deposit, which is in southern Utah. We did have an asset, TV Tower, in Turkey, and we monetized that recently and closed the sale a few weeks ago.
Well, let's dig into Black Pine because some of the big news that came out recently was on October 10th, you put out your pre-feasibility study, the PFS, and this really dives into the economics of the project. It highlights the project's strength and why it looks like it's going to be a future mine. I guess give us some of the key takeaways and metrics from that PFS.
Yeah, thank you, Shad. So, we were delighted to work. We've been working on the pre-feasibility study now for about just over 9-10 months. We leapfrogged a PEA, so we did not produce a PEA because as we were starting to write one, we discovered the Rangefront deposit, which we drilled into in October 21, and then spent the following kind of 18 months drilling it out. And that was 1.2 million ounces in resource, and that took us to over the 3 million ounce resource, which we published in February this year. And that was really the basis to allow us to go straight into a pre-feasibility study. That was published on October the 10th. And the kind of key takeaways here, this is a multi-pit, open pit, run-of-mine heap leach operation or heap leach project. Run-of-mine heap leach means no crushing, no agglomeration. So quite simply, drill it, blast it, put it in a truck, drive it to the heap, dump that truck on the heap, grade it with a dozer, irrigate, and extract the gold. So a very simple, low-cost operation, some of the lowest processing costs in the business. And the deposit really works around the ability to control the mine costs. In terms of the sort of high-level metrics of the project, 17-year mine life for a total gold production of 2.2 million ounces. 183,000 ounces per year, average for the first 5 years. 135,000 ounces per year, average life of mine. Cost base, the all-in sustaining would be $1,205 per ounce in years 1 to 5. $1,380 life of mine average. So pretty competitive all-in sustaining cost base. To get to that project, you need just over $320 million of initial capital, which is a very reasonable, kind of doable number. Payback is at a $2,000 gold price, which was the base price for our evaluation. Payback is 3.3 years. And the metrics that describe that, this would be a 32% internal rate of return after tax, for a $550 million NPV, both of those figures at $2,000 per ounce gold. If you look at spot pricing, or I guess it is spot now, it's just under spot perhaps, or over spot, at $2,600 an ounce, those metrics, the after-tax IRR jumps to 62%, and the NPV 5% jumps to $1.2 billion. So this deposit is hugely leveraged to gold price. And as price ramps up, you really see an improvement in value. And payback for that case at 2,600 drops to 1.5 years. So a pretty attractive project on all of the sort of leading metrics.
Yeah, John, and I'm glad you did the sensitivity to $2,600 gold because that's exactly where I was going to go. A lot of people want to see that the project still stands on its own 2 feet at lower prices, but we also kind of want to look at things through the lens of where the metals prices are today. And it's interesting, you basically chop the payback period in half and you double the NPV and you double the IRR. So it's a very healthy project at today's prices, even at lower prices. One of the comments that a lot of people make on development projects like this is, how is this junior going to possibly get together the capital stack needed to get that CapEx, that $327 million? So could you maybe speak to the different options you have on the table?
So we're just starting to think about that, Shad. I mean, we are, as we'll probably talk about, the time frame to a construction decision is something in the order of 2.5, maybe 3 years, between 2 and 3 years. So we've got a bit of time to figure out how do we finance this. We're very bullish on the gold price. I think we see a lot of upside potential in the gold price, and we would obviously expect to see growth in our share price and our value as that share price increases. Traditional ways of funding this would be some mix of debt and equity. For a $320 million build, something like 50-50 might be the way to go, 150 of debt and 150 of equity. When you start to look at that kind of equity at our share price at the moment, one could imagine with some growth in that share price from exploration success. We have a program to keep exploring what we consider is highly prospective ground around Black Pine. So we see a lot of upside growth potential in the stock and in the company as a result of what we're doing. And so I think that number, 320, in 3 years' time, is actually a very reasonable and approachable number for a company such as ourselves.
Okay, and you kind of alluded to the timeline there, and that really ties into the permitting process. So I know you just received the Hard Rock Prospector permit back in September. You announced that to the market on the 25th, and you added more land around the area, I think another 7 square kilometers. But walk us through the rest of the permitting process. I believe some of this ties into the environmental side of things, and just where is the company at and what's the timeline, John?
Yeah, Shad, thank you. So just to refresh, the announcement of that Hard Rock Prospector permit, that was the latest permit approval in a whole series of permits that we've been working on since we took over this project in 2016. We've actually done 4 environmental assessments, and that's a 12 to 18 month process, so a full environmental assessment. And we've incrementally grown the approved area for permitted exploration. That area today stands at 40 square kilometers. And that includes those Hard Rock Prospector permits, which are a class of permit for a particular land type that we have on in certain areas on the property. So that was a special that we organized with the forest so that we could have that property included as part of our exploration property. The total land package today, the package that we have under lease, as it were, mine lease, is 70 square kilometers, just under 70. So not only have we got 40 permitted and forms our exploration program for the next few years, we've got an additional 30 outside that is not yet permitted, and that we would seek to permit that over the next couple of years. So that piece, I think, tells you that we see a lot of long-term exploration upside here. In terms of the future mine, which is described by the Pre-Feasibility Study, that study was really the key piece in progressing the formal US federal mine permitting process, which happens under a government act called the National Environmental Policy Act, otherwise known as NEPA. And those are the regulations that you're required to follow to go through what is quite a prescriptive process to permit a mine. It starts with a pre-feasibility study, and very simply, that study is reformatted into what is called a mine plan of operations. And that really is the sort of the declaration to the federal government of what we intend to do. That is submitted to the federal agency, the lead federal agency, which in our case is the National Forest, the US Forest Service, because the deposit is on National Forest ground. The processing infrastructure, the heap and the ADR plant will be on the BLM, the Bureau of Land Management. So we have a lead National Forest, we have a co-lead in the Bureau of Land Management, and then we have the state agencies. And the three of those work together to take the project through this NEPA process. Once we've submitted the mine plan of operation, there is a period of 6 to 12 months where that gets reviewed and accepted. It's called deemed complete. And we would expect that to happen sometime in the third quarter of next year. Once it's deemed complete, you then receive a federal notice which says that the project has been registered in the Federal Register in Washington. And at that point, you start writing the environmental impact statement, which is the basic document which describes what are the impacts and how are you going to mitigate them. That process to a final decision takes 2 years, and that's mandated in law by the Biden administration mandated that under the Inflation Reduction Act. So from a notice to a draft decision notice is 2 years. So we would expect to have our draft decision notice Q4 27. And at that point, we would be making a construction decision. Construction would start sort of mid-late Q1 28, just after the snows melt. And we are a 9-month construction period. And we would expect to see first metal off the heap late 28.
Fantastic, Jon. That's a great timeline of key catalyst as far as the permitting into a construction decision and then eventually into first metal pour. Gives people a nice roadmap of what to look for in the years to come. And I guess let's also dig into the resource itself, how there's the potential to expand it. You've had a 20,000 meter ongoing drill program. And sometimes, Jon, people will say, well, hey, this isn't really high grade. Sometimes the retail market in particular gravitates to those high grade areas, but this is an open pit heap leach project. So just talk about how the resource is expanding, but how the grades are perfectly economical for open pit mining.
Yeah, Shad, thank you very much, because I think that's a really key question. And you know, our average head grade, the reserve average grade is 0.32 grams a ton. And that's a figure that's not dissimilar to many other open pit heap leach operations in the Great Basin. So, you know, we're in the zone with many others who are operating mines at that grade. So let me start with the exploration potential. I said that we have 40 square kilometers permitted for exploration. The resource and reserve are in the sort of core area. And this latest permit is sort of an onion ring, if you want to think about that, around that. In that onion ring, we have 7 key targets that we've developed by a combination of structural geology, surface mapping, and surface geochemistry. We have a pretty good handle on the distribution of gold and the gold-bearing units. And so we've created these 7 key target areas. We've drilled 3 of them. We're in the 4th area right now. We have drills turning today in the target called Great Basin, which is in the southwest. We will get to the other 3 targets next year. And we're doing a first pass through these areas. Exploration here, this is a very large area that we're looking at. Sort of 20 square kilometers is this new area that we're drilling out. And the mineralization consists of high-grade, relatively small, high-grade lenses sitting in a 400-meter package of carbonate rocks. And so when you drill it out, and gold is sort of diffused through the entire system, so we very rarely see a drill hole with no gold in it. And the key with exploration is we're trying to find these higher-grade areas and then piece together what do they look like so that the lower-grade halos with the higher-grade core creates enough sort of critical mass for that to pop as a deposit and justify an open pit. So the future, I think, is for us to finish drilling those 7 target areas where we find interesting mineralization, go back in the following year, drill out around that. As we piece together mineralization, then go in and drill at a closer space to get us to indicated resource. And the resource right now is 5 million ounces. And, we see an upside potential for 2+. But that drilling will take us, in an exploration sense, 2 to 3 years to get to that. So that's what the future looks like. In terms of the grade, let me sort of try and give you a sense of what it means. The mining cost that we came up with in the PFS is just over $9 a ton, all in. So that would include mining a ton of ore, which is roughly $6.50, processing a ton of rock on the heap leach, which is roughly $1.80. It includes G&A, which is roughly 70 cents, and that calculates out to around about $9 a ton. When gold was at just over 2,700, 2,750, at 2,750, a gram of gold is worth about $90. 1 gram. 1 gram, $90. 0.1 of a gram is worth about $9. Our operating cost, full operating cost, is about $9. So at 2,750 gold, 0.1 gram recovered pays for the entire operating cost, and you break even. So 0.1 recovered is approximately a 0.16 head grade. So in principle, we can put 0.161 grade material onto the heap and we make $1. So at an average grade of 0.3, you can see that we're making nice margin. Obviously, the higher the grade, the better. And in the mine plan that we came up with, we really looked at, in the early years, focusing mining on the areas where we could get to nearer surface, higher grade material, so that we could get as much revenue up front in this mine to allow us to pay back the initial capital as quick as possible. And we achieved that by achieving an average of a 0.45 head grade for the first 5 years of operation. And then that grade drops off as the lower grade halo, which gets stockpiled in those early years, that material gets fed back onto the heap for processing later in the life. Of course, at that point, you've paid off your capital. So the rest of the processing, you can afford, in a sense, to process lower grade material, but you're making very nice margin on every single ton of rock that's above a 0.16 head grade. Does that kind of make sense?
Yeah, that's a great breakdown. I think it shows you where the break even is and where the margins are, and they are pretty fat margins. And to your point about the exploration upside, if you're only into 4 of the 7 key target areas, you never know. You may find some higher grade pockets to weave into the mine plan. It's still early enough to look at that for expansions. So, John, we've talked about the economics, we've talked about the permitting, we've talked about the resource, we've talked about the exploration on Black Pine. Let's quickly weave in Goldstrike in Utah, a second project for the company. Will that be getting any work in the year to come?
Yes, I think it will, Shad. Sort of Goldstrike, we did a lot of drilling at Goldstrike. We well understand the distribution of the mineralization. It's a 1 to 1.5 million ounce system compared to Black Pine, which is a 5 to 7 million ounce system. So it's a more modest system, but it's got slightly better grades. It's got nice metallurgy, and we've taken it from a resource point of view as far down the road as we want. But we have a strong de-risking strategy. And one of the things we did very well at Black Pine early on, when we realized this was going to be a mine, was we acquired water rights. And today we have 100% of the water rights that we need to be able to execute the mine that we came up in the pre-feas. And those water rights are existing rights that we've purchased or will purchase. And that means, in the Black Pine case, no new drawdown in the basin, which is really important, preserving people's ability to abstract water from the basin and not impacting that. In Goldstrike, we are still in that process of resolving water rights for the mine. And we decided that we would put a hold on further engineering until we wrapped up those water rights. We're in that process. We hope to have a resolution of that by the end of this year. And once that gets resolved, we would be doing some water exploration and water permitting next year to sort of concrete that and confirm that we have permitted water to let that project go ahead. Meanwhile, internally, we've done a sort of an update to the resource model. We're doing some internal scoping engineering, using, increased metal prices. The last time we studied this publicly was a PEA at a 1350 gold. Obviously, gold's a lot higher than that now. So we're looking at the impact of gold price and what does that mean. We'll keep that internal for the moment. And we'll see how we go next year in terms of getting a water supply. The last piece on Goldstrike, which, as I'm sure your readers know, the antimony price sort of went a bit bananas in the last year or so, particularly around some of the Chinese decision to restrict exports of antimony from China and the focus, particularly in the US, on US domestic antimony supply. So we'd always known there was antimony mineralization in the system at Goldstrike. So we went back and had a look, and Goldstrike sits on a sort of on an arcuate system, and on the east end of that system, we'd known that there was some antimony mineralization. We went back and had a look, and we kind of put our data together, and it would seem we went to the field and had a look, and we've got quite coarse, high grade antimony oxide mineralization on surface associated with a jasperoid breccia. That jasperoid breccia is a linear feature. It looks like it's some kind of slip structure, and it's quite extensive. We've mapped it for more than 2 kilometers. We can see this coarse crystalline antimony mineralization at many points along that structure. And on the face of it, you think, wow, maybe there's something here. We did some initial sampling. We've got the results back of those samples, and we're in the process right now of working that up into decide how we would release it. But, we may expect to see some news on that in the near term. That will then prompt a second round of field work, probably before the end of the year, to confirm our thinking and confirm the fact that it looks like we've got some nice grades near surface. And then ultimately, I think if that then pans out, we would be looking at some field activity after the winter melt, sort of Q2, potentially trenching, potentially some drilling to really understand what does this actually look like down dip. So, we don't want to sort of lose our focus on oxide gold, but we've got this antimony show, which on the face of it looks quite interesting. So we're cautiously following that up.
All right, that's a good update on Goldstrike, and so we'll keep tabs on some of the water rights issues, how things evolve with some of the desktop studies and de-risking, and also looking at that antimony co-credit as a nice kicker along with the gold. You did have a third project, and as you alluded to, John, you have monetized that in October. That's TV Tower in Turkey. I guess tie that into the financial health of the company. What kind of money does the company have in the war chest? And just speak to this non-dilutive way of raising capital for the company.
Yeah. We sold the TV Tower prospect, which had 4.5 million gold ounces equivalent in it. We sold it to a Turkish privately owned mining house, and we closed that deal probably a few weeks ago. The initial payment has been received. That was $3.7 million. So that went into our treasury. We have a second payment that's under bank guarantee that's due October next year for 2.2 million. And then a third payment the following October for 2.6 million, I think it is. So that's kind of a nicely phased return from that deposit that underpins our sort of corporate G&A going forward quite nicely. We've just literally yesterday released our Q3 results, and we've got just over $11 million in treasury right now. That is more than enough to satisfy our work programs going forward. We're pretty comfortable with where we're at right now. Obviously, things slow down a bit over Christmas and the New Year, So that's convenient. And that'll allow us to start next year with money in treasury and to sort of look at, see how the year evolves.
Yeah, John, nice to have money in the treasury in a tough capital market for the junior mining space and a very accretive transaction for shareholders that you still have some more payments to receive next year and the year after. So kind of a stage-gated approach to having more capital come into the treasury for the company. And I guess just as we wrap up, we've talked about a lot in this one. Of course, the main emphasis being at Black Pine, but some catalyst at Goldstrike. What are the main things, the main milestones and catalysts you want investors watching out for, let's say as we round out this year, but as we head into the first half of next year?
So I think in the very near term, I think you're going to see some news about antimony and Goldstrike. That's a sort of a small catalyst. The next cab off the rank will be the filing of the pre-feasibility technical report on CDAR. That is due before the 26th of this month, so you'll see that filed ahead of that date. The next, I think, key catalyst will be submission of the mine plan of operations based on that Black Pine pre-feasibility study. That gets submitted to the forest. We will release that officially, and that should be by the end of the year or very, very early in the new year. And then I think you're going to see interspersed into these, we're going to have some exploration results from the drilling that we start, the 20,000 meters we spoke about. That started in July. We've still got a drill in the field. And so, assay results are coming in and we're putting those together. So you'll see some news release on those coming out in the year. I think going into next year, we will have drills back in the field probably in March or April, depends a bit on the weather. So we would expect to see exploration drill results, infill drill results, and resource upgrade results in the sort of second quarter of the year. By the third quarter, you're going to see an updated resource model. That will be the feasibility resource, and that will have the improved, the upgrade from inferred to indicated. It'll have the results of step-out drilling. So we're thinking that we'll show some nice resource growth in that new resource model. And that will then trigger the start of feasibility in the fourth quarter of next year. So I think those are probably the key metrics and the key catalysts going forward for the next sort of 6 to 9 months.
All right. Well, we'll wrap it up there, John, but great update on Liberty Gold. And we'll keep following along as some of those catalysts come out and get you back on for an update. So it's not so long between interviews. That way we can kind of follow along with the company a little closer. If for those listening in to the call, if you want to follow along with the news from Liberty Gold, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, and you can sign up for updates there. And John, looking forward to our next conversation.
Thank you, Shad. It was a pleasure to talk to you, and thank you to your readers for listening and for their interest in Liberty Gold. I think the gold developer space is sort of, it's a hard-earned space in the market at the moment, but we believe it, due to the depressed prices, it's a fantastic opportunity. If you're long on gold, those who develop mines, they turn into mines in the long run, and that we believe is a source of great value growth for investors. So we thank those of you who are listening, who are already in our stock, and welcome any newcomers to the stock.